Good morning, and welcome to today's webcast, PCAOB Focus Areas for IT Dependencies. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and with that, I'll turn it over to John Donohue to get us started.
Thank you, Chad. I'm John Donohue, SEC Practice Leader for Moss Adams. With me today are 2 leaders from our IT Assurance practice, Weston Nelson and Jennifer Grant. Weston and Jennifer work with both our PCAOB audit engagement teams and with consulting clients on IT-related internal control projects. I'm very excited for them to share their insights today. This is our second webinar on the general theme of IT matters for PCAOB audits, with a focus on integrated audits and when a control reliance approach is taken. Our specific learning objectives today are IT dependencies for internal controls and how management can strengthen its documentation and evidence. The content today is complementary to our previous webinar in May, which covered the 4 domains of IT general controls. I encourage you to watch that webinar for additional information. It is available on our website. And again, more detail on the agenda. Our goal today is education to share with you all where the PCAOB has set the bar in external audits. As companies, you don't directly comply with PCAOB standards, but practically understanding what auditors expect is an important step in meeting those expectations in an efficient and effective manner. We've put the same quote from the PCAOB chair as we had in the May webinar, as it captures well the current regulatory environment and the ambitious change that the PCAOB is pushing through the public company auditing profession and the downstream impact on public companies. With that background, I'll turn it over to Weston and Jennifer.
Thanks, John. And as John mentioned, our goal today is to really provide insights specifically around those questions and expectations that regulators have of the external auditors. Our focus is really on sharing those opportunities as a team, both as management and as the external auditor, to improve efficiency and effectiveness on the integrated audit, but more importantly, to really help share some insights on those questions and how, with management's help, through their documentation and evidence, we can streamline the process to improve the overall efficiency of the audit that's performed on a yearly basis. With that, to really set the stage, if you joined us in the May session, these concepts will be familiar to you. These are very much going to be the same kind of focus areas as we go through today. Today's going to be focused specifically on more of a technology area, compile or with business process and business elements tied to it. And really the emphasis here is to help provide some understanding of how both sides really need to understand information and where it's coming from, how that information is documented, and the type of evidence that's retained for those areas, specifically around automated controls, key reports, SOC reports. And lastly, you're going to hear a lot about completeness and accuracy. That is the driving factor in many of the questions that are provided by the PCAOB as they go through the inspection process with the external auditor. And with that, we're going to move into our first polling question, and I'll turn it over to Chad.
Thank you, Weston. And for our first polling question today, what are you looking forward to learning more about today? Either A, automated controls, B, IPE, key reports, C, SOC reports, or D, I'm just here for the CPE. If you select the answer on your screen and hit the submit button, your polling question will be recorded, and we'll give you about 15 to 20 seconds to answer this first polling question.
And as you're going through and answering the question, one thing we would like to do is, if you have questions throughout the presentation today, please provide that in the Q&A section of the webinar. We will do our best to respond to some of those questions throughout the polling when we have the polling questions, but we will reserve many of those questions till the end, knowing that there's a lot of content that we're covering today. If we're not able to get through all polling questions, we will reach out to you and make sure that your question is answered.
All right, we're about 90%, so we'll give you a couple more seconds here to answer this, and we'll move on to the results. All right, let's check out the results.
Okay, it looks like we have a few here for CPE, but a lot are interested in the different areas. With that, I'm going to turn it over to Jennifer, who's going to start walking us through the first area.
All right. Thanks, Weston. Thanks, John. I wanted to quickly share first a recent PCAOB spotlight they issued in April of this year on some common deficiencies found in the 2021-2022 inspection cycle. Almost 20% of comment forms in this cycle contain deficiencies related to completeness and accuracy of information produced by the company, IPC or IPE, you may hear it, information produced by the entity, or other data and reports that may be coming from service organizations, which we'll also be talking about today. I think we continue to see this as a trend in our recent inspections this year, just kind of further emphasizing that there continues to be a really strong focus on IT dependencies. I put together a quick illustration to highlight how common IT dependencies can be in the simplest of processes. So you can see in my fixed assets process here, we've identified various types of automated controls and a key report within applications that are developed and maintained by service organizations. We're going to dive deeper into the pain points and some of the challenges that we see within these areas, and then provide you, as Weston mentioned, provide management with opportunities of things that they can do to better prepare for the audit this year, kind of get ahead of some things. But before I jump into the first topic, I did just want to quickly clarify the difference between IT dependencies and IT general controls, which we mentioned was a topic in our May webinar. IT dependencies reside within the application, and they apply to individual transactions within a business process and are dependent upon effective ITGCs. ITGCs relate to the overall environment that support the application and cover those 4 domains we talked about: change management, security, kind of program development and implementation, and operations. So definitely go check out our May webinar if you did not attend. So we'll jump into the first of 3 areas that we'll be diving deeper into today, and that's automated controls. Because of just the inherent consistency of IT processing, automated controls are great for an organization's control environment because they can prove to be more effective than manual controls. They're designed to function consistently and can precisely address financial reporting risks because they do function the same each time. Here are some common automated controls. They exist in various forms. Some of the most common ones that we come across and you're likely using in your organization is when an application is performing a key calculation, like asset depreciation or an AP aging, a validation check, the most common being a three-way match between a purchase order, invoice, and receiving, a workflow that is used across many different processes, journal entry approval, purchase order approval, invoices, maybe reimbursable expenses, and then security. So really restricting access to authorized individuals through various system permissions. So once we, as the auditor, there's quite a bit of detail that we're looking to ascertain about an automated control. But first and foremost, I would say it's critical to understand the business process in which the control applies. We don't want to test the control in a silo. We really want to understand the context of the overall process that control resides. And that's a very coordinated effort between our audit teams, our IT teams, and yours as well. So when we're looking to understand the design, we're really going to be asking questions to understand the nature of it. Is it inherent? Is it logic that automatically resides within the basic functionality of the application? Or is it something that management has the capability to configure, to their policies, to what their needs are? We're looking to understand who can change that configuration. What roles or permissions in the application allow someone to change it? And are those roles and permissions being reviewed by management on a periodic basis? What is the process to change the configuration if you can? Does it follow the standard change management process that management has implemented, or is there another process that we need to discuss? Can that automated control be bypassed or overridden in any way? And again, what roles or permissions would allow someone to bypass or override that control? Is that control set up the same across all companies if you're using different sets of books? If so, we would need to look, at each instance of that control to make sure that it's set up in a similar fashion. And then are there processing variations to the control? This may be similar or come up in a workflow where there are many decision points along the path of that workflow that can take that information off in different ways. So there are different ways in which something can be processed. We need to understand what all of those processing variations are. So once we do understand the details of the control, we can develop the nature, timing, and extent of our procedures in order to test the control. And the nature of our testing will include inspection of the configuration and the modification date when that data is available. We'll also be looking to perform or observe a transaction to actually see that control operate. When possible, our testing should be done in a production environment. If we do need to test in a non-prod environment, this will require additional procedures and documentation on our part to validate that the non-prod environment does replicate production. The timing of our testing, of course, it's point in time, and we do like to test ITACs earlier. And our approach is typically to then rely on the company's change management controls to gain comfort that any changes to the control itself or the application would have been approved and tested, and the control would continue to operate as designed for the remainder of the period. Of course, for some higher risk controls, we may choose to test it again or perform additional procedures to validate that the control has not been modified. And also in just thinking of timing, of course, these controls are dependent upon the effectiveness of ITGCs. And so we do want to have a solid basis for believing that ITGCs will be effective before we even spend time looking to go down a path to test these controls. The extent of our testing is based upon the type of automated control. For inherent controls, we will want to prove that the company cannot, in fact, change this control in any manner. And the most common way that we do this is inspecting user manuals or going out to knowledge webs to confirm the functionality within the application is in fact inherent and that management cannot change this. For all controls, we will perform a positive test. So a test to prove that the control is working as intended using valid data. And where applicable, we'll also look to perform a negative test. And that is to verify that if there are errors that need to be shown, they are being shown when they should be. And as mentioned, these procedures would need to be replicated, over multiple sets of books, over various calculations, or each type of transaction if there are processing variations. The next two slides, I've included just examples of how we would test an automated control, kind of what would the positive test look like, what would the negative test look like. I won't go into details here, but definitely take a look when you get the slides after the presentation today. Oops. So a common question we are asked is, can we implement a baselining or benchmarking approach to testing our application controls? The simple answer is yes, that management and the auditor can take this approach as long as the ITAC hasn't changed since the last time it was tested and that ITGCs are effective. However, under AS 2201, this is actually a little more difficult than it sounds. And I know, Weston, you have specifically had conversations this year with the PCAOB. So I was hoping you could share more about baselining and benchmarking.
You bet. This is definitely an area, as Jennifer mentioned, that is available. So benchmarking or baselining, often kind of used synonymously. That standard, or the PCAOB standard, which is for the external auditor, does allow for that. But there are specific paragraphs in that Appendix B, paragraph 28 through 31, that really highlight what is needed. And so often what we found as we were going through the inspection this year is that there are a lot of procedures that you need to do as a management team, as an external audit team, to really document if you're carrying that benchmark or that baseline forward, how you know that that benchmark baseline hasn't changed. To the extent that it even goes beyond just proving that the last change date hasn't changed or is still effectively the same. It's going into change management. It's going into your security controls. It's going into a number of areas that what might seem like a great strategy may end up taking you more time to create all of these factors than simply just testing the application control each year. So just bear in mind, there could be an efficiency thing here where that effort is in benchmarking and baseline could become more effort than just testing it on an annual basis.
All right, thanks, Weston. So just common challenges we're seeing, talking about baseline and benchmarking, determining that approach can certainly be a new challenge that we'll be talking about. But I listed some other ones here. The first one I'll talk about, just no clear ownership of automated controls. I think just because of, the involvement of both business and IT, we oftentimes are being bounced around and going back and forth when we're trying to understand all of the details that I discussed when learning about the application control. So, making sure maybe there is one person that really does understand kind of the end-to-end about an application control can be difficult. So that's often a challenge for us. Another one, the third bullet point I'll talk about, the system not tracking or logging when an automated control has changed. As Weston mentioned, I think this can oftentimes, impact your ability to do a benchmark or baseline, and just having to to do maybe other procedures as part of the audit when we're looking to understand modification dates. And then the last one is management not appropriately identifying the financial statement assertion that's being addressed by the application control. I'd say the most common example here that we run into is with interface controls. So when System A is transferring data to System B in an automated manner, you want to make sure that that data transfer is complete and accurate. And oftentimes we'll see management point to an interface control for both completeness and accuracy. When you actually look at the design or how interface controls operate, they really are only addressing completeness in most cases. So making sure that a batch run was complete, a number of rows of data was completely transferred, and it's not addressing accuracy. So that's probably the most common one I can think of, but being precise on those financial statement assertions. So what are management's opportunities as you prepare for the audit this year? Or, maybe you're in the midst of it now, but during those process walkthroughs, when you are discussing automated controls, make sure you're discussing the automated controls in the context of full end-to-end process walkthrough, and that you do have business and IT users in the walkthrough so that we can make sure we're gathering all the correct information at that point in time. Having a firm understanding on the financial statement assertions of automated controls, knowing which roles and permissions can change any of those configurable automated controls, and revalidating that those permissions are included in your periodic user access review, making sure that automated controls are included as part of your change management process. Since we are relying on effective ITGCs, we need to be able to confirm that any of these control changes are in fact going through your change management process. And the last bullet point is one that I think is probably going to be the newest for most companies of what we may be asking as part of our audit procedures this year, is that really for those inherent controls, how I've mentioned, going back to user manuals and confirming that these are indeed inherent controls. We are pulling working with management to pull user manuals to find that specific functionality to confirm that. So getting ahead of gathering that documentation. And then if you are relying on an automated control from a third-party application, you may automatically be assuming that that is something that's covered and tested as part of the SOC 1 report. Go back to your SOC 1 reports, look at those, and make sure that you really can get reliance on the SOC 1 for that. And Chad, I'll turn it over to you for our polling question number 2.
All right, thank you. And our second polling question of the day, what's your role at your organization? Either A, finance and accounting, B, internal audit, C, audit committee, or D, other. If you select the answer on your screen and hit the submit button, your polling question will be recorded today. As a reminder, you must answer 3 of the 4 polling questions to receive CPE credit today, and we'll leave this up for about 15-20 seconds for you to answer this one.
And while you're answering, we did have one polling question that asked for automated controls that are inherent or where that logic is built into the system, and it's not configured or not editable, if that's the right word there, by management. Would you consider that a key control? I think it all comes down to if that specific function is serving the purpose of meeting in its financial statement assertion, then you would still classify it as a key control. You just have it tagged as an inherent control. Part of this that gets a little challenging is it's going to depend on the environment, whether you're using an off-the-shelf application that is managed by a vendor versus a organization that has custom developed their applications. Because there may be, through a DevOps environment or through custom development, those inherent controls that have been hard-coded into the system that you would still need to keep as a key control and still need to prove, given that that is not something that you could lean into a manual or something else like Jennifer mentioned earlier. So it's a scenario where it really does depend. I do, if it's an inherent control and it's serving a purpose to meet a financial statement assertion, I would take credit for it and keep it as a key control, but just something to think through, and it's going to be very specific to your environment and the nature of the application.
All right, thank you, Weston. That, and we're going to check out the results.
Good distribution. And I'm going to assume selfishly that the 26 are IT or within the IT group.
We should have put that as an option. All right. I think we can jump into the second topic, information produced by the entity, or IPE. You'll hear this probably have many different names depending upon who you're talking to. The PCAOB refers to it as IPC, information produced by the company. You may hear, IUC, information used in the control, but really key reports and spreadsheets is what we're talking about. As seen in the PCAOB spotlight I shared earlier, there's a lot of attention on IPE. And as Weston mentioned earlier, the two biggest buzzwords you will hear over the course of your audit, I'm sure you're sick of hearing them, but completeness and accuracy around IPE. So how do we know that the information being used in the performance of your controls is complete and accurate? That's the question we're trying to answer. We want to make sure that it contains all of the data that it should, and that data is free from errors. We place so much emphasis on CNA because completeness and accuracy of information is necessary. It's critical in the detection of errors as well as the detection of fraud. And there are many risks that can jeopardize the completeness and accuracy of information, as seen in the diagram I've put together here. There are four main risks that I mapped out here. The first one is that, the data processed by the application is not complete and accurate. So this is really thinking about the input of data into the application. So looking at input controls. If that's not good, bad data in is bad data out. Risk number two is that the data extracted from the application is not the intended data. So, perhaps the root cause of this is that the actual design of that report that you're using is pulling an incorrect company code or accounts. And so the data extracted is not complete or accurate. The third risk we think about is that the actual calculations performed by the application are inaccurate. So maybe thinking about what we just talked about, some automated control was changed, didn't go through change management, it's not functioning as designed, but that's causing the information in the report to be inaccurate. And then the fourth risk, and this one is one maybe we don't talk about enough, but we will be, but that the data is manipulated inaccurately by the end user. So, if the ultimate output of the data is in a modifiable format, there is a risk that the end user can change that data and the data now becomes incomplete and accurate. So thinking through those four risks that I just mentioned, I think there are really three kind of pillars in obtaining complete and accurate IPE. The first is having effective process controls over the source data, so those input controls, and we'll certainly look to identify those as part of the audit. The second is having effective IT general controls, so controls around security and change management, making sure any of those changes made to the application are authorized and tested so that those automated controls, key reports are being tested and functioning as intended. And then the validation of the IPE once that data or information, is produced from an application. And that is management's procedures, what they're doing each time that IP is used in a control to validate that the data is complete and accurate. So those are the three kind of key pillars that we need to consider when we're calling information complete and accurate. So like automated controls, when we think about IPE, there is a lot of information that we're looking to understand, and there's a lot of IPE that we need to identify. and we determine something to be IPE if it's information that's used in the operation of a control. So maybe a report from the system like an AR aging or a manually prepared spreadsheet that's used to support a journal entry. Those would be considered IPE. Any information that's used as a population in the test of our controls. So maybe we'll pull a termination report from a payroll system like ADP, and we can use that for a variety of tests that we do. That would be IPE. And then any other kind of evidence produced by the company which would be used as audit evidence. We identify most of our IPE through walkthroughs, but certainly through our OE testing or substantive testing, this is how we come to create our full inventory of IPE. The information or the questions you're going to hear when we're asking about IPE, we're really looking to understand, what is the relevance of this IPE to the audit? What is it being used for? Is it to support a control? Is it to support a population? What is the source of information? Maybe is that information being interfaced from another application? How is the information coming into the application? For system generated reports, we're looking to determine the type of report. Is it a canned report that comes out of the box with the system? Is it a custom report that's been developed specifically for the company? And then ultimately, what is the report output format that's being used by the end user in the execution of the control? And then are there any modifications to that report once it is generated, intended modifications versus inadvertent modifications? We're looking to understand management's procedures to review completeness and accuracy of the report. So how are they verifying that it's the correct report, it was run for the right time period, any parameters or filters that were applied, that those were correct, report totals, row counts, things like that, procedures that management should be doing each and every time that IPE is used to confirm the CNA of the IPE. We ask a lot of these questions because depending upon the nature of the report, there are other considerations we may need to assess. So whether or not the completeness and accuracy of the IPE may be covered by a SOC report, or if it's a report that management can change, are these changes running through their standard change management process? Who can make those changes, what permissions, what are different security controls you may have? And all of this really can impact the level of difficulty of the procedures needed to assess the CNA of IPE. So some common challenges that we see related to IPE. The first one I'll touch on is incorrectly identifying sources of information. I think really what I mean here is kind of how that report is generated. And this really comes up a lot when report writers are being used. So maybe Oracle is really the source application, but you're using Crystal Reports or Tableau or some other report writer to actually extract the information. And so not properly identifying report writers is actually a pretty common mistake that we'll see. And then I guess to make it a little more complicated would be if maybe information is going from the application, maybe Oracle, into some type of data lake or data warehouse, and then the report writer is actually pulling from that source and not the application itself. So again, critical of having business and IT users in those walkthroughs so that we can get questions like that answered as part of the walkthrough. Other challenges, reports not included in the change management process. Maybe ITGCs are deemed ineffective, and then you cannot, management would have to perform additional procedures to get comfortable over the completeness and accuracy of their reports. What we just talked about, management performing their own CNA procedures, while we may have discussions about things that they are doing as part of the walkthrough, we actually aren't seeing the evidence of those procedures when we're looking at the IPE as part of our control testing. we're not seeing, the screenshots or the review procedures or the sign-offs or the tick marks, things like that, to make sure that they have validated that the report or the data is complete and accurate. And then I think this last bullet point is probably the most common one that comes up in our audit, but management may sort of blindly or solely rely on the SOC 1 report to gain comfort over the completeness and accuracy of a report coming from these hosted applications. So I think this is just a really important slide. It's important that the SOC report explicitly state procedures performed by the service auditor over completeness and accuracy, and then explicitly states the IPE to which those procedures apply. So you can see an example here from ADP, how they've discussed, the service auditor has laid out the procedures performed specific to CNA and over specific reports to which those procedures apply. So if the report does not contain similar language to this, management must perform their own CNA procedures over the reports. So management's opportunities, first and foremost, maintaining your own inventory of IPE with a lot of the details that we've discussed today that we're looking to gather as part of our walkthroughs. But the biggest one I'd want to focus on in Weston, please feel free to jump in, because I think, this is also a big area as part of inspections. I know you've had a lot of discussions around, but the expectation of management when it comes to the documentation and evidence that they need to keep as part of their CNA procedures, screenshots of the reports, names, dates, timestamps, filters, anything about that report of when it was run, that's included in the evidence package that we're receiving, and that we can see that management has approved that. I don't know, Weston, if there's anything you want to share as part of that.
Yeah, no, you said it well. I think what we see a lot of times when we're in the inspection process is we get a lot of questions around, that's great that what the auditor did, but what did management do, right? So what are the steps that management's performed? So we're seeing, again, while the standard, the PCAOB standard is for the auditor, that there is an expectation that in management's efforts, they're kind of following a similar understanding of how they get comfortable with completeness and accuracy.
I did include kind of a simple example here of, screenshots of showing a report, the filters, and maybe including some review procedures of what that would look like, the type of evidence that should be retained by management. And then taking it a step further is including evidence also, if that report or information is in an editable or modifiable format, what are the procedures that management should take to make sure that that modifiable format does agree to something non-modifiable? For instance, taking a screenshot from the system report on the screen, maybe a report total, and using that screenshot and showing that it ties out to the total in the Excel output. So I definitely say, a lot of enhanced procedures, a lot more expectations around management's evidence over CNA. And then finally, don't wait until year end to test ITGCs. I think this can be said for the automated controls as well, because these dependencies do rely on the effectiveness of ITGCs, making sure that you are testing ITGCs throughout the year so that you can get comfortable that these will be effective as of year end and not have to perform additional procedures. And with that, we'll go to polling question number 3.
All right, we have our third polling question of the day. Is your company currently taking a benchmarking approach to testing automated controls? Either A, no, we have not explored this. B, no, we do not have automated controls. C, yes, for applicable controls. Or D, I'm not sure. So if you select the answer on your screen and hit the submit button, your polling question will be recorded today. We'll give you about 15 to 20 seconds to answer this one.
And while they're doing that, I think there was one, I've seen a couple of questions come in, and please keep those questions coming. We may not get to all of them, but definitely we will get back to you if we don't get to them today. The one question was specific around if we have a service organization and they don't explicitly call out the report, can you still take reliance on the SOC report? Probably, I would say in our experience and what we've seen, if you know that it is actually a canned report that is developed by the vendor and is managed by that service provider, and the steps you can take to help prove that it is a managed report, you would need to take some steps to demonstrate that you don't have the ability to change it, you don't have the ability to access it, you don't have the ability to modify it. But while the SOC report itself doesn't explicitly call the report out by title, it may in there have a generic statement that does allude to canned or those reports that are inherent to the application as being covered. So just be aware. The other thing that's hard to speak to here a little bit is they will caveat your inputs. As Jennifer mentioned, there is the input component to this too that you need to take into consideration.
And Wes, just to clarify too, I think if it's not specifically called out and you're sort of digging deep, I mean, I think this is where the evidencing piece becomes difficult in the documentation there. And I think really looking at what from the vendor, the owner of that, the code and the software that service organization really has provided or published or what's available there. This can't be I don't think I can do this type of scenario. It needs more than that.
Yep. Correct.
All right, and after that question, we'll get to the results.
Okay. Kind of split between taking and not taking, and then not sure. So good. Hopefully this session was timely.
All right, we'll jump into our last area, and this is around service organization. So pretty important, as we mentioned, we're relying on service organizations for various IT dependencies. There may be IT dependencies, or we have service organizations that are performing essential business functions like processing payroll. So ADP is an example, things like NetSuite, full ERPs, processing all of our financial transactions we're relying upon. A popular one as of late, network security services, a company you may have heard of called CrowdStrike. So this rise in outsourced systems and services really has kind of increased the demand for these third-party attestation reports. And the standards that I have here on the screen are really aimed to provide guidance on, the auditor's use of these reports. So ultimately, when determining if one of your service providers should be in scope for your ICFR audit, you should consider any provider that is processing financial transactions, whether that's the manual processing of transactions or utilizing their software to process transactions, or both. It's likely in scope. In our engagements, we always ask, is there an IT dependency? So is there an automated control? Is there a key report that we're relying upon? If so, that is likely to be in scope. Many of my clients, I would say, 75, 80% of their technology stack is outsourced using a service organization. And so, we're increasingly evaluating more and more of these attestation reports as part of our audits. So service providers can issue a variety of compliance and certification reports, but for our purposes, for an ICFR audit, we're really interested in the System and Organization Controls Report, or SOC report. specifically the SOC 1, Type 2. I won't go over all of the details in the chart here. You can take a look at that later. But a SOC 1 Type 2 is sort of the king or queen of SOC reports from our perspective. Because a SOC 1 report is really focused on internal controls over financial reporting, and the Type 2 means that it covers a period of time versus a point in time. It covers transaction processing controls as well as IT general controls. This is really the SOC report that we're looking for from a service provider. I know there are a lot of popular applications that only offer a SOC 2 report. Fun fact, I looked on CrowdStrike's website. That's all they provide. They do not provide a SOC 1. But a SOC 2 report can have limited purposes, usually for ITGCs, sometimes as limited as certain logical access controls. It's not going to cover those business process controls or maybe the broader IT general control suite. So again, SOC 1 Type 2 is what we're looking for. Before we go further, we may already have it in the chat. The most popular question that we get is what happens when the service provider does not have a SOC 1 Type 2 report. As I mentioned, you may be able to leverage another report like a SOC 2 for very limited purposes. In most cases, without a SOC 1 Type 2, management is ultimately responsible to address the risks related to the services being performed by the service organization. So this usually means implementing additional controls to gain comfort over those automated controls, over testing the completeness and accuracy of key reports coming from that application, and perhaps some additional monitoring controls over any manual transactions that are being processed. I think another question may be, what about an international location we may have and they're utilizing a local service provider? I think similarly to the discussion before, they're most likely not issuing a SOC 1 Type 2 report. They do have similar standards to the AICPA's SSAE 18, and they may be issuing a report under one of these similar standards. I have yet to come in contact with an international service provider that actually is. If they are, we can look through those and evaluate those reports to determine if they're adequate for our needs. But if not, we have to treat it as if there is no SOC 1 report. So we're going to assume that you are able to obtain a SOC 1 Type 2 report, but just because a service organization issues that doesn't mean, management's in the clear. There's a lot we need to consider when evaluating one of these reports. Some of the key aspects that we need to look at is who issued the report. Is it, is the service auditor a reputable CPA firm? We're looking at the coverage obtained from the report. Ideally, you want 9 months of coverage from a report, and then that remaining 3 months to get you to the full calendar year or fiscal year would be covered by a bridge letter or a gap letter. It's important to note that bridge letter is issued by the company, not by the service auditor. So we are looking to obtain sufficient coverage from the SOC report itself. Obviously, looking at the report opinion, an adverse opinion can mean we cannot place reliance on the third party. In both a qualified and unqualified, you're likely a qualified for sure. You're going to see the deficiencies that will need to be evaluated, and you'll need to assess any impact to your organization. And then the complementary user entity controls, or CUECs. These are the responsibilities and obligations of the user entity to ensure the achievement of the control objectives identified in the report. So we want to understand how management has addressed those CUECs in their organization. Common challenges that we see related to the use of SOC reports. First is that management has not identified all of the SOC reports that need to be obtained. I think that's either because a company like ADP uses many different products, and each of those products may issue an individual SOC report, and management is just maybe unaware that different reports need to be obtained for different products. Also, depending upon the nature of the report, how the SOC, if the service organization is utilizing a subservice provider, they may have an inclusive or carve-out method, and I have more details on that in the next slide, but depending upon that method, you may need to actually go out and get applicable subservice provider SOC reports as well. So just making sure that you have identified all the reports that you need. What we just talked about, management over-relying on SOC reports to get comfortable over CNA, making blanket statements over deficiencies identified in the SOC report. So in management's assessment of the SOC, we may see a statement that, no deficiencies have impacted the organization, versus going through each deficiency itself and doing a proper assessment on why it does not impact the organization. And then we'll often see management not correctly identifying which control objectives in the report actually relate to their organization, and then which CUECs are relevant. So that can cause just a lot of back and forth as we're looking at their assessment of the SOC report. So what can management do? Understanding kind of the various products that are being used by service organizations, going through those, reading through who subservice providers are, and making a list of which reports that you need to be obtaining throughout the year. If you're implementing a new system, I would say as part of your system implementation process, get the provider's prior year SOC report, just so that you can have an idea of what's included in the report versus waiting till perhaps the end of the year for looking at it the first time, and making sure that you do have the relevant CUECs implemented. Utilizing a template is really helpful when documenting your assessment of a SOC report. Moss Adams, as any other audit firm, we have templates that can be shared, but these are really helpful in making sure that each component of the SOC report have been properly reviewed and documented. Being precise when identifying which control objectives and CUECs are applicable to the organization, and then making sure for those CUECs that are applicable, that they are key controls and that they've actually been tested and deemed effective as of year end. I've included just some examples of mapping CUECs. A couple of other notes for management. Making sure you understand the coverage of your SOC reports, and then identifying if you do need to perform any additional procedures if you're not getting that 9 months of coverage. A lot of my clients with kind of off year ends will see this as an issue, and we'll need to do additional procedures. And then, as I mentioned, making sure you're doing an appropriate assessment of deficiencies. So looking at, has the service provider remediated the deficiency? Are there compensating controls that can be leveraged? Do additional controls need to be implemented? But really thinking through that in your assessment of each deficiency. Again, some examples that you can take a look at later. And that gets us to the end of our presentation and our final polling question.
All right, and our fourth polling question of the day: how many SOC reports does your company review each year? Either A, none, B, 1 to 4, C, 5 to 9, or D, more than 10. So we'll give you about 15 to 20 seconds here, and if you select your answer and hit the submit button on your screen, your polling question will be recorded.
Weston, do you want to maybe try and we can cover a little of the Q&A in the chat while people are doing this? I think we had a couple of questions come in about, the challenge of maybe, or the pushback from service organizations not wanting to list out hundreds of potential key reports in their SOC reports, and sort of how, the challenging the documentation maybe getting, from Oracle or other providers where they can do that. I don't know if we have any tips or tricks on that. I mean, I think part of it is, making sure that they're hearing from their customers, which is all of you as companies, kind of what's needed from an external audit standpoint. You're not alone. I think other auditors are asking similar questions as well. And so I think the more the service providers sort of hear what's needed from the company's perspective and the external audit process, the more that will help drive, including more of that relevant documentation in what they provide. But I don't know, Weston, if you had any insider ideas on that topic.
No, I mean, I think you said it well. I think that if they don't hear from anybody, they assume everything's okay, and they're always going to take the path of least resistance. So the more that you have with these vendors that you're using, the more that you can share with them explicitly what you need, the better. I mean, the more that they're contacted, the more they're going to hear and want to serve their customers. I think there was another question. I think I want to just make sure that we got, as you're going through and we're talking about the key reports and the SOC reports, there may be circumstances, and there is in the standard. Again, PCAOB standard for the auditors does allow for people to get creative. If, for example, you have an off year end and you're not able to get coverage through the full year, like Jennifer mentioned, ideally you want to get a SOC report that covers 9 months, and then you have a 3-month bridge letter. The rule of thumb is usually that 3-month bridge letter is about the extent that you go. There are circumstances where I know with some really off year ends that a lot of the SOC reports end October and November, and then they're taking a bridge letter from that period to, say, a 3/31, which is their year end. So it could be as much as a 5-year bridge letter, and they can't wait for the issuance of a new SOC report because it overlaps their filing date and isn't released. So you might need to get creative, and in the standard, there is some wording that allows management to reach out to the service provider, even reach out to the auditor of the SOC report, just to ask questions and gather information that may enable you to bolster your support for that extended period.
And Weston, just to clarify, I think I might have heard the 5-year, but I think you meant 5-month.
Did I say 5-year?
Yeah, I think I heard 5. Yeah.
5 years is a long bridge letter. No, 5-month bridge letter. Sorry about that.
Absolutely.
All right. This is the results. It looked like a large number actually have 10 or more. I think as you go through the SOC reports, it's really making sure that you've got a good understanding of and I'll come back separately, as Jennifer mentioned, really understand what controls you're sharing with that service provider, or basically extending to them, and then making sure you have a good understanding of how you're going to evaluate that. So anyway, with that, I think we're at our time, and I'll turn it to Chad to close us out.
Awesome. Thank you, Weston. Thank you, John, Weston, and Jennifer for a great presentation today. If we didn't have time to answer your questions, we'll do our best to follow up with you after the webcast. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window. If you participated as an individual and met all the certification requirements, your certification is available for download now in the CPE progress window. I'll keep the webcast open for a few minutes to give you time to download your CPE certificate. A copy of your CPE certificate will be emailed within 3 weeks should you have any difficulty downloading it now. And here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Thank you all for joining us today.